Good morning, students. I am Mrs. P. Jsjustlearn, Assistant Professor, PG and Research Department of Commerce, Arulmigu Palaniyandavar Arts College for Women. In this video, you will learn what is bank, classification of banks, and functions of commercial banks. Let me see what is bank. A bank is a financial institution which deals with deposits, advances, and other related services. It receives money from those who want to save in the form of deposits, and it lends money to those who need it. Next, we discuss about the definition of banking. According to Banking Regulations Act of India 1949 defines banking. Banking means accepting for the purpose of lending or investment of deposits of money from the public, repayable on demand or otherwise, and withdrawable by check, draft, order or otherwise. Next, we see about classification of banks. Banking plays a vital role in distributing the money for the development of trade, industry, and commerce. Bankers are not only dealers in money but also leaders in economic development of a country. They can be classified based on its function, ownership, and schedules of RBI. Based on its functions, they can be classified as commercial banks, industrial banks, regional rural banks, foreign banks, and central bank. Commercial bank. A commercial bank is a financial institution which accepts deposits from the public and gives loan for the purpose of consumption and investment to make profit. Next, industrial banks. These banks assist to promote industrial development by providing medium and long-term loans, underwrites the shares and debentures, assisting in the preparation of project reports, providing technical advice and managerial service to the industries. Next one, regional rural banks. These banks are established in rural areas. Its object is to develop the rural economy by providing credit and other facilities in the rural areas. Next one, foreign banks. Foreign banks are those which incorporated outside India and opened their branches in India. Central bank. It is the apex bank and it occupies a central position in the monetary and banking system of the country and is the superior financial authority. In India, Reserve Bank of India is the central bank of our country. Next classification, it is based on its ownership. They can be classified as public sector banks, that is, banks that are owned and controlled by the government. Next one, private sector banks, banks that are owned and controlled by the private individuals or corporation. Third one, cooperative banks. These banks are operated on cooperative principles. Next classification, it is based on schedules of RBI. They can be classified as scheduled banks. The banks that are listed in the second schedule of the RBI Act of 1934. Second one, non-scheduled banks. The banks that are not listed in the second schedule of the RBI Act of 1934. Next we see about functions of commercial banks. The functions of commercial bank can be classified into three: principal functions, subsidiary functions, and innovative functions. Principal functions are also called as primary functions or fundamental functions. The most important function is receiving deposits from the customers. To attract savings from all sorts of customers, banks maintain different types of accounts such as current account, savings bank account, fixed deposit account, and recurring deposit account. The second important function is to advance loans to its customers. Banks charge interest from the borrowers, and this is the main source of their income. Commercial banks lend money to the needy people in the form of cash credits, term loans, overdrafts, discounting of bills, money at call or short notice. The third function is investment in securities. Banks invest a considerable amount of their funds in government and industrial securities. The fourth function is credit creation. When a bank advances a loan, it does not lend cash but opens an account in the borrower's name and credits the amount of loan to this account. The fifth function is promoting check system. Banks also render a very useful medium of exchange in the form of checks. Through a check, the depositor directs the banker to make payment to the payee. Next one, subsidiary functions. It is also known as secondary or supplementary functions. The first one is agency services. Banks act as an agent on behalf of the individual or organizations. The most important agency services provided by commercial banks are collect checks, drafts, bill of exchange, interest, dividend, rents, etc. And also pay life insurance premium, rent, EB bills, telephone bill, etc. Buying and selling of securities, advise on right type of investment, and also act as trustees, executors, attorneys of their customers. Banks also serve as correspondents and representatives of their customers. These are all the agency services provided by commercial banks. In addition to agency services, modern banks perform many general utility services such as it provides locker facility to their customers. Customers can keep their valuables such as gold, silver, important documents, securities, etc. in these lockers for safe custody. Bankers issue travelers checks to help their customers to travel without the fear of theft or loss of money. It enables tourists to get fund in all places they visit without carrying actual cash with them. Third one, banks issue letter of credit for importers certifying their credit worthiness. Next one, banks act as referees and supply information about the financial standing of their customers on inquiries made by other businessmen. Fifth one, banks collect information about other businessmen through the fellow bankers and supply information to their customers. Sixth one, banks collect statistics for giving important information about industry, trade and commerce, money and banking. Banks underwrite securities issued by government, public or private bodies. Last utility services. Some bank provides merchant banking services such as capital to companies advice on corporate matters, underwriting, etc. The adoption of information technology and communication technology, the banks enables to provide many innovative services to the customers, such as ATM services, debit card and credit card facility, telebanking, internet banking, bank assurance, mobile banking, electronic clearing services, national electronic fund transfer, and real time gross settlement, RTGS, that is. These are all the functions of commercial banks. That's all. Thank you, students.